Hello and welcome to Every Quacha. This is episode number 25 and the date is 28 February 2024. So if you followed this channel in the last few episodes, I've talked much about risks that are associated with investing. In this particular episode, we continue with the subject of risk, but from a different perspective. So just before you begin to think that risk is only associated with doing something, with investing in this particular case, I decided that we do this episode just to balance things out and to really share with you what I think is an important lesson for everyone to know. And this lesson is that risk is everywhere. If there is risk in investing, there is also risk in not investing. So in this episode, I'm talking about the risk of doing nothing. I'll approach this from an investment perspective, and I have three specific risks that I want you to consider as you sit in the sidelines and see your friends, your colleagues investing, whilst you just watch and don't do anything because you are so afraid to invest. That's not a very good long-term strategy because there is also a risk in doing nothing. I share three such risks. Let's go. Risk number one, inflation. Okay, so doing nothing doesn't help you combat inflation. Um, I think that by now you know what inflation is. If you had 100,000 kwacha and you put it in your account and you left it there not to earn any interest, you left it there because you are not using it for any investment, you just let it lie there. Inflation will erode the purchasing power of that amount of money over time. So there is risk in doing nothing. There is inflation risk in doing nothing. If you're not using your money to make even more money at a rate that matches or at least beats the inflation rate, then you are regressing. Which brings me to this quote that you will see around, I think, quoted in different contexts. There are many people who have been attributed to have said this, that when you stop growing, you start dying. So as you go about, as you live day to day, there's a tendency for inflation to erode the purchasing power of your money. So if you are to maintain the purchasing power of the money that you have, you need to get it to work so that it earns more money and it beats inflation. So that's the number one risk of doing nothing. It's inflation. And maybe before I move to the second risk, I'm not so sure if you've realized, if you've noted that we also cited inflation as one of the risks when it comes to investing, especially fixed investment investments. They are prone to this particular risk of inflation. So it's kind of interesting to see inflation again being cited as a risk if you are not doing anything. It just goes to underscore that there is risk everywhere, and it doesn't help to run away from investments on account of risk because there is also risk in doing nothing. Risk number two, what is the risk of doing nothing? Number two is missed opportunities. And here, maybe I can give an example of the stock market. So over time, historical data has shown that markets tend to move upwards. If you look at, say, the Lusaka Stock Exchange, the performance of the Lusaka Securities Exchange over a period of a few weeks, you might see volatility in the stock prices. You might even see that maybe it's not performing very well. The stock market is not performing very well in Zambia over a short period of time. But when you look at its performance over a long period of time, you will see that consistently, the market tends upwards. And it's the same case when you look at these stock markets in the developed world or even in other African countries. The historical data consistently shows that the market tends upwards. So what does this mean? It means that if you keep, staying on the sidelines, you miss out on potential long-term gains, potential long-term returns. There is no point. It doesn't serve you well to sit on the sidelines, um, you know, because you can be sure that over the long term, investment opportunities like stocks, they'll they'll return they'll give you returns that that are higher than if you just kept your money, under your pillow, or if you just kept your money in the bank. So that is one of the other risks of doing nothing, is that you miss out opportunities because you are not in the game. You miss out on opportunities to make money, you miss out on opportunities to learn. So there is no point in you staying on the sidelines. We go to the third and the last risk of doing nothing, and it's the fact that you lose the compounding power that comes with time. So by doing nothing, you miss out on the incredible potential of compounding returns. I think that you know that the longer you stay in the game, the longer you have your money invested, the greater the chance for compounding to work its magic. And so, if you stay out of the game, it's difficult for you to match and even exceed the kind of returns that you would get if you were to stay, in the game for a long period of time. So there's no point in you doing nothing, staying out of the the game of investing, if I might call it that, because you'll be missing out on the compounding power. Because the magic of compounding works at its best when you give it enough time. It's a factor of time. And so don't stay out of the game. Get into this game of investing, um, because it doesn't save you if you just sit on the sidelines. And you're just waiting and seeing your friends investing in the different assets and getting those much needed skills that only come with experience. That's what I had for you today. I look forward to your comments. I look forward to your questions. Drop them in the comment section and let's get investing.